Okay, good afternoon, madam. I'm Shaalini Mahendra, and I'll be starting the introduction. Okay, today our group would be group from group 3 SM2. Okay, our group will be doing about food and beverage. So our group members are Deepasri, anak perempuan Sivanesan, Divya Kandan, Sujanthini Magatiran, and myself Shaalini Mahendra. So firstly, okay, firstly is about the background of the organization. The organization details would be we have decided to come with start with food and beverage, which like something like DT bar and restaurant. So it's like food and beverages. We decided to name it DTSS bar and restaurant. Operating hours would be if we like to start this operating hours of this would be this organization should be 10 a.m. to 1 a.m., which is normal hours usually for a bar and restaurant. Honors capital. So to start this business, it's around half a million to half a million thousand, or 500,000, including the place renovation products, furnitures, and the deposit payment for the lot. So, um, yeah, so literally for all the whole payment would be needed for the half million. So the type of business we are going for is partnership, which means two owners, and the capital payment will be divided by two. So which means 250,000 per person to start the business. Okay, this what business activities do we have? Selling of food, beverages, alcohol, or baked goods. Like something like a small bakery kind of, but not bakery. It's just like a pastry side of the thing. So yeah, and it's a place to for dining, or it's also can take away. The location we have chosen for this business bar and restaurant is Kuala Lumpur, which is a very happening city in Malaysia and also a famous tourist spot, which means it will be able to attract more customers for this business. Thank you.
Hello, madam. My name is Theiviya, and I'll be explaining about the characteristics of the food and beverage industry. So here are some of the characteristics. The first characteristics will be you have to communicate clearly. Successful food service operators are clear and concise when giving directions and motivating your staff. The second characteristics will be you have to think creatively. These individuals tend to generate and embrace new ideas and innovative ways of doing things. The third one would be a take hands-on approach, working both the front and the back of the house. The successful operators have encountered would never ask anyone to do something they would not do themselves. The fourth characteristics would be being proactive. They use their suppliers' resources to access industry's information and forecast price fluctuations. The fifth one will be applying influence. These individuals are eager to take charge and are comfortable executing leadership and providing directions. The sixth one will be adopting a service mentality. Simply put, this this simply put, this doing whatever it takes to make the guest experience best can it be. Just know the kitchen cannot create a quality dishes without an appropriate equipment and products, nor the servers sell a new menu if they don't know what the dishes taste like. And the eighth one will be acting independently. Successful people exhibit autonomy, have a sense of courage, and engage in self-directed activities. They chart their own costs. However, they understand it's impossible and it's risky to do it all by themselves. And you have to stay focused, maintained in a bigger picture. So you have to stay focused when you're in the food and beverage industry. And the last one would be embracing collaborations. This individual act cooperatively to foster a win-win interaction with others and strive to accomplish goals and teamwork. And I'll pass the next slide to my team. Thank you.
Hi, good morning. I'm Deepasri here. So today I'm going to present for the classification of possible. So the first one will be the asset. asset that either can be expected cash or convert into cash within a year. The contact of bar and restaurant. This is the checking account and saving account, food inventory and bar inventory, account receivable in short-term investment and more. So, and then the part of the restaurant charts of account to have a bar inventory or wine cellar app that can immediately can give an accurate real-time picture of the inventory. Otherwise start taking physical inventory. And then moving on to the liability, the bar and the restaurant owes. This include the current account payable to supply along with the company credit card, tax owed and more. And moving on to the next one, sale of food and alcohol. Selling the food and beverage is obviously is the main source of the revenue. Proper marketing of this food service operation is also vital. Simple put, there are four different ways to make more money in the food service industry. The first one will be bring in more customer. The second one will be get them come back or purchase more often. The third one will be give them to bring others with them. The fourth one is about get them to spend more while they are there. So this one is increase the average check, and then the next one will be upselling. Upselling is for the train in proper technique as they related to upselling. Upselling is when get customer to order extra item. An extra item, for example, of unstable item would be appetize, dessert, coffee, but alcoholic, and non-alcoholic beverage or menu add-ons like mushroom for steak extra or higher price slide for their meal, such as price instead of chips, etc. And then moving on to the next, um, meeting room rental space or buyouts. Okay, so buyouts where food service operations spells the entire property for the evening. It is important to understand what would charge on particular day. And then moving on to the next will be off premise catering. So where is the food beverage and service is brought to the another location. Another benefit of that event does not utilize seats in the restaurant. So caterer also a great way to build the reputation of the business. Okay, and then the delivery and the drive up. So many restaurant offers delivery and third party delivery is a growth are the growth are in the food service industry. Delivery does not take up any space in the wedding room or the dining room. Many restaurants also take the advantage of drive up, where the customer order online and drive to the property, met an employee when they arrive. Moving on to the next slide. Service charge. The service charge is proposed. Tips and service charge are two complete different things. So the first one will be a charge can be added to the guest check and typical amount. So the tips, on the other hand, the money left for the server should not technically be put, not should be portion be held back from the server. So merchandise, this can be simple setting hats and t-shirts, such a cashier station to the operator elaborate stores online purchase in the place like hardcore coffee Hard Rock Coffee, Cracker Barrel, and Tea Life also because they also got the bag and the cup. Starbucks also because they also have the cups and the tumbler like that. Okay, and then the gift card is also another great way to bring the extra revenue for the extra for the restaurant. Many of the gift cards also will never be redeemed, making them nearly 100% profit. And then moving on to the next one will be salary and other labor costs. Okay, the manager have to have to forecast labor need carefully to so they don't schedule too few or too many employees. Example of the labor costs include the salary, wages, benefits, and unexpected tax and service commission. Then it also include the cost of providing employee with uniform, and then cost of the goods sold. Cost of the goods sold is the second largest expenses for the restaurant after food and beverage costs. Okay, and then marketing and advertising expenses, and then one is marketing expenses including everything it does to get guests to come and eat food in the restaurant. One of the most important marketing is the menu, and it also decided many of the other expenses a restaurant has. And moving on to the next slide, real estate occupancy expenses. This can be proper taxes, rents, insurance, and utilized as well as other costs associated with the restaurant's physical building. Repairs and maintenance. The restaurant operating expenses can be broken down into repairs and maintenance. This can be also divided to between maintenance needs of a building itself, the dining area, the kitchen, the food preparation and cleaning equipment, and so on. So the next one is about daily administrative costs. Administrative costs are similar to those who incurred by the business. They include not s- not they include office supplies, telephones, charge, postage, and fees. So, to professionals such as accountant, and lawyers, restaurant also must pay a number of licensing fee to local health department and for the beverage license.
Hi, I'm Sujanthini from Ambassador. Today I'm going to talk about the financial statement of recording process in food and beverage. The accounting cycle is a collective process of identifying, analyzing, and recording the accounting event of a company. It is a standard of each step of process, begin with a transaction occurs and with inclusion financial statements. Firstly, identify transaction. An organization begins its accounting cycle with the identification of those transactions that comprise a bookkeeping event. This could be sale, refund, payment to vendor, and so on. Next is record transaction in a journal. Next come recording is using journal entries. Then the recording are based on receipt of invoice, recognition of a sale, or completion of other economic events. Next is posting. Once a transaction is recorded in journal entry, it should post on in accounting in the general ledger. The general ledger it provides a breakdown all of accounting activities by account. And the fourth step is unadjusted trial balance. After a company posts general entries to individual general ledger account, an unadjusted trial balance is prepared. All of accounting activities by account. And the fourth step is unadjusted trial balance. After a company posts general entries to individual general ledger account, an unadjusted trial balance is prepared. The trial balance ensures that total debit are equal to total credit in the financial record. The fifth step is worksheet. Analyzing a worksheet and identifying adjusting entries make up the fifth step of the cycle. The sixth step is adjusting journal entries. At the end of the period, adjusting entries are made. These are the result of correction made on the worksheet and the result from the passage of the time. And next step is financial statement. Upon the posting of adjusting entries, a company prepares an unadjusted trial balance followed by the actual formalized financial statement. And finally, closing the book. An entity finalizes temporary account revenue and expenses at the end of the period using closing entries. These closing entries include transferring net income into retained earnings.
Okay, I'm Shaalini Mahendra again, and next I would be discussing about the identify and explain the advantages and these three advantages and three disadvantages of accounting recording process. So firstly, it's for three advantages. The first advantage is provide financial statement of the company. It helps the owner to measure the longer or shorter going concern of the company based on the profit that company earned. The second would be account management will be more effective. Account management will be more effective. It records all the financial transaction pertaining to the respective year systematically in the books of accounts. Finally, the last advantage would be comparison of results. Accounting recording process makes it easy to equate the financial performance of one year with another, so it can find out about the improvements or which one needs to be improved, something like that. Okay, next would be the disadvantages. Okay, the three disadvantages would be firstly, expenses accounting information in terms of money. Expresses accounting information in terms of money. Okay, non-financial transactions cannot have an impact on the books of accounts. Only transactions of a financial nature may be calculated by the accountant. The second disadvantage would be recording of fixed assets at the original cost. There might be a difference between the original cost and the new cost of replacing a fixed asset due to the time of efflux, technological transactions, and others. Okay, so the final disadvantage would be accounting information may be biased. Accountants have a personal impact to the on the entity's accounting records. The accountant may use various methods of inventory valuation, depreciation methods, treatment of revenue and capital expenses to calculate the entity's income. That's all from me. Thank you very much, and that's all from my group as well. Thank you so much.